a reconciliation. It's there is a, when you deal with we first deal with CRJ, deal with CPJ, bank account, BS, by bank statement, you can see there. Then also old BRS, the new BRS. So what happens here, as you know, that when you're dealing with bank reconciliation statement, we are given the books of the business. Remember, the books of the business is always the cash payment journal, the cash receipt journal. Yes, those are the two business books, and also the bank account that I've not included it here yet. These are very crucial to note. Okay, let's go. Now we have a bank account, your cash payment, your BRS, and your cash receipt journal. Okay, let's change this to be thicker. Okay, and then you have your bank reconciliation your reconciliation when you reconcile it with your bank statement, meaning that you have your cash payment journal, you have your BRS, you have your cash receipt journal. So these three, you reconcile them with your bank statement. Remember that each and every month the business prepares the cash payment journal for that particular month, and it prepares bank reconciliation. It also prepares a cash receipt journal. Now, bank recon is prepared by the business. Therefore, the details are being sent to the business so that every error that has been made by the business or by the bank to be corrected, or any omissions that has been made by the bookkeeper of the business can be corrected into the bank, because sometimes it happens that a deposit can be deposited into the bank but not appearing in the books, and also a money can be entered into a CRJ and not be entered into the bank statement. So these things are very important to note, and also you must understand the difference between these terms: CRJ, CPJ, bank account, bank statement, old bank reconciliation, and new bank record. Remember, our new bank record is the one that we do this current month, and the old BRS is the one that we received, or we did last month. Is to actually check whether the bank has made the correction that we asked them to do. That's why you prepare a bank record as an accountant, is to send to the bank. It's like we are requesting the bank to actually do the books for you, or to do the corrections for you. So that's why you prepare that's why you keep the old BRS, so that we can recompare it with the bank statement again. You don't compare this one because it's a new one, the one that you do based on on these four books here. Okay, let's go to the next step. Next steps, it's a cash payment journal. Now here, as we know that the business make payments, the business pay money, pay their employees, pay salaries. The business is also renting, or maybe they rent the buildings, they use water and electricity, and all those things are called expenses. And these expenses, they are actually recorded into this kind of journal, and this is one of the books of the business, right? Okay, now we are going to actually just to explain what it is, and how do we use this one. Now let's go. Now CPJ, first of all, these are the expenses. These are the expenses. Number two, these are expenses, and they are recorded in the bank account of the business. So it means that they decrease the bank of the business. And number two is that as these expenses they appear also in the bank statement of the company. On which side? On debit side. Remember, we have credit and debit. Now all the expenses of the business or of the company, they appear on the debit side of the bank statement. Someone may ask why we record expenses on the debit side of the bank statement. It's because expenses, so when you if I am the bank, for example, I am the bank, meaning that I am Capitek. I am Mr. Capitek here. This is me, Capitek. This is the bank. Now in the Capitek, there is a debit and a credit then. So debit and credit in the bank. Now Mr. Capitek, when he sees my money in his point of view, he actually see me as a creditor. And then on this side, this will gonna be negative, because why? Capitek sees me or as a creditor. It's because Capitek owes me money. So all the money that is there in my bank card or a bank account, that money belongs to me. It doesn't belong to Mr. Capitek. So Mr. Capitek must pay me the money. When I want my money, I must get it. If I want to buy some McDonald's, I must withdraw some money. If I want to buy some KFC, I must just go get money. So that money does not belong to the bank. It belongs to me. It's my money. So it means that Mr. Capitek is actually owing me money. So it is a must in his books that he must record me my money on the trade side, because it's a sign of owing. Where recorded, it's a liability to him, and therefore whenever I withdraw anything from that bank, that money must be shown on the debit side of Mr. Capitek. Now that's why we are saying cash payment journal are recorded on the debit side in my bank statement. So at the end of the month, Mr. Capitek must give me the records of how I spent my money on the month end, so that I can see my records. How did I spend money and all those things, so that I can also reconcile what is in the books of the business, that is CRJ and CPJ and bank account, and compare it with the bank statement. Yeah, so that's why we are having this cash payment journal here. It is necessary. And now let us go to cash receipt journal. Now cash receipt journal is different from CPJ. Let us look at this one. Now when you speak about the cash payment journal, you speak of the money that the company is receiving, right? And this money is received by the company, and let's just change this this one. Okay, it's fine. Now here we are having income here. These are the daily income that we receive as a business, and these money are recorded on the credit side, of the bank statement. On the credit side of the bank statement. Now remember our bank statement again, just the credit side, and therefore this is debit side, and this is a bank statement. What did I say? I said that the expenses are recorded here, and the money that I deposit into the bank is recorded there on the credit side. Why I record it there is because I take the money, I give it to Mr. Capitek, and Mr. Capitek keeps the money for me, and that money will go and stay exactly on the credit side of the bank statement, because to Mr. Capitek that money is a liability. It doesn't belong to him. I just say, Mr. Capitek, please can you just keep this money for me, just for a month or for a day or whatever, but I will take my money when I want it. So that money does not belong to him. It's my money. So when I want it, I take it. So you put that money here. If I gave Mr. Capitek 5 rand, for example, that 5 rand is gonna go and stay on the credit side. When I want 2 rand there, I will go and deduct on the debit side 2 rand, and the money that will be left, it will be how much? It will be 3 rand. The money that now it's left in the bank. Remember, so this debit side, it's a sign of expenses. Then this credit side, it's a sign of what? Of credits. Yeah, okay. Then I think you have heard this one. Cash receipt journal. Don't forget, on the bank statement, it's on the credit side, and it's an income. The last part of it is the bank account. So this CRJ, you'll always see on a bank account, debit and credit. Remember, there's a difference between a bank account and a bank statement. Now, bank account is for the business. Now, on the bank account, now on the bank account, now it's an asset into the business. Now, this is the point of view of the bank account. You see, you're gonna for example, if we say that we have 10,000 rand money in the bank, in that we have a positive of 10,000 rand into our bank. So this money, it belongs to the business, right? It's an owner. It's what we own. Okay, no, it's fine. I will try to explain that. And then remember that your incomes, they are recorded. Every money that you receive is gonna increase your bank account. Okay, let's go to another one. Here is the general ledger. This one, you prepare this one after you've prepared your CRJ and your CPJ. So first of all, your first step that you do, is to prepare your bank statement. Okay, let's just take another color here. Just take which one? Let's take this one. Okay, now bank account. So you have your debit and you have your credit. Now remember, now we speak of an asset here, because now we speak the language of the business. Now this belong to the business, part of the books of the business. Remember, we have 3 types of books in the business: of CRJ, CPJ, and bank account. Now this one, whenever we receive money, we're gonna record that money here on this side of the bank, on this side, right? So we're gonna record that money here. Whenever we pay, we're gonna record it here. So the money is going, the money in, right? So the CRJs are recorded here after we prepare them. They're the total of the preparations, and then the CPJ must be recorded here, right? I think this is very easy. Now your balance here, it must go to the bank statement. It must go to the BRS that is due for the current month. Okay, let's just do this and just see the structure of the account. How does it look, so that we can see when we are actually told to prepare the bank statement, or the bank account rather. Okay, let's just take our pen again. Let's go to our pen. Now here, let's just draw a line here. Now, whenever you are creating a bank account, you will always have your year there. Oh, let's take another color there. Let's take this one. So let's say that we are in 2014, March 01. So you always have your balance brought down. Then you will always have your balance carried down. Then you have your CPJ, your CRJ. Then you have your balance of 21,000 rand there. If 21,000 rand, I'm just making examples. Then you have your balance of 20,000 rand there. That is your CRJ totals. Then it's going to be 30,000 rand, maybe that one. Therefore, you just total up everything. When you add this side, it's higher than that side. So it means that you're going to have here your 41,000 rand there. And also this side for 1,000 rand. Minus that by that, it's gonna be 9,000 rand. It's gonna be 11,000 rand. 11,000 rand. This is the balance carried down. Therefore, you close this balance brought down by 11,000 rand. 11,000 rand. Okay, you are done. So this money must go to BRS. This money must go to BRS. Then write the bank account, credit minus and debit plus there. Okay, you are done with this bank account. It's an example, just an example, these ones. Then here we are dealing with bank statement here. Remember what did I say to you? I told you that when you deal with bank statement, you actually dealing with expenses, this side, expenses, and also you are also dealing with on that side you are dealing with incomes. So money comes into the business that are coming into the business into the bank account. So remember, this is a bank. Maybe it's FNB or whatever, FNB, and debit and credit, bank statement. Bank statement is plus and minus. Remember, FNB is like FNB is to you. FNB is someone that owes you money. So that person to you is a debtor, but to you are. But the FNB sees you as a trader, as a business. So all the incomes, they come here, and all the expenses, they come here. So yeah, that's it. Done there. Let us go to the last one. Bank reconciliation statement, the old one. So this one is very easy as well. You know, this one was the one that was actually prepared last year, but now it also appears now in the question. They usually ask this always. So the only thing that you must do about this one, BRS old, compare it to BS that you are given, and compare with that one. So the monies that BRS, the monies that are not included here, money that are not included here, no, rather, okay, money that you don't see here but are here, those monies must go there again. But if these monies appears here and there, they appear both, these monies must just ignore them. But if you don't see, let's make an example here. Let's say that you see here 10,000 here, and then here you don't see 10,000. So it means that this 10,000 rand must go to BRS. That is new. 10,000 must come here. That 10,000. I think you're hearing me there. It's very easy, this process. But if the money is here but it's not there, then that money for sure it appears in one of the cash books there. Actually, this new one here is made of what? This new one is consists of debit balance or credit balance. Debit checks, credit deposit, debit or credit bank. It depends whether the bank is maybe is on the credit side, on the debit side. Debit and credit. If you are given a debit balance, then you're gonna put a debit balance there. Debit checks, maybe gonna 1, 2, 3 checks. They usually come up maybe 4 of them or 3 of them. Deposits, 2 of them or 1 of them. Then debit bank from the previous bank balance. Remember this one here, take this money and you come with it and put it there. Okay, that's all for today. Thank you for watching. Enjoy your day. Have a nice day.